All right, it's time for another end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. And as you know, tomorrow is Take Back Friday. So we're going to do a quick video just taking a look at what's been going on so far and where we are. All right. So the first chart here, we're going to go with the euro. Okay, we're gonna look at the euro dollar here, or should I say euro currency, however you want to say it. As you can see here, the bears are clearly in control of this market and have been since the week of December the 25th. So here was your initial crash alert sell signal. Market bottomed out, gave a rally alert buy signal off of the technical bounce. Then we got another crash alert sell signal alerting us that the downtrend was ready to start resuming, and all this downside production has been pretty amazing. All right, this is where we are right now, ladies and gentlemen. Unless something happens, sometime tonight into tomorrow, we're getting ready to put in another leg down. It looks like we've fallen off of the cliff so far this week. This is this week's bar. All right. We're starting another leg down. All right. The market went sideways for 2 weeks. Then the bottom just fell out this week. And as you can see, the market accelerated itself to the downside. We're very much in the red zone. So I think there's going to be continued pressure put on the euro. And yes, at this point, ladies and gentlemen, I'm calling it, telling you now, don't be surprised if the euro drops below par. It's in danger of doing that right now. You're at 111. All right, you don't have too much further to go before you drop below par, drop below 100. The euro hasn't been down at that rate since its inception back in 99 and 2000. All right, so back when it was 88 cents. So yeah, just something to think about as we're moving along. I understand about the news and things that came out, but you got to look at everything in totality. All right, let's take a look at our Illuminati index. Here's Hack on the weekly chart. Here's where we are so far. As you can see here, downside is accelerating. The market closed right there at the low of the session, and the downside selling pressure is accelerating as the market is now fallen over the cliff and is gaining an acceleration to the downside. All right, you are nicely well aware that you are in a bear market. You have been in a mature bear market since the week of November the 19th, and the downside production continues. Now, on the surface, you could say, all right, well, that means that we don't have any major false flags to think about or cyber threats or things like that. That's not necessarily the case. There is a divergence between the key reality that's going on now and this index. All right. So as far as state-sponsored acts of terror, things like that, that doesn't seem to be on the horizon. Okay, that's been on the downslide, and the reason being is because they have something far greater and that can last longer, and that's called a pandemic. As long as you keep telling people that the pandemic will be with us forever, you have the gift that keeps on giving. It is a tyrannical government's best friend. All right, it's the genie in the bottle. It's the gift that keeps on giving. So that is where we are. Pay no attention to the man behind the curtain. How are banks doing right now? Well, take a look at Bank of America. On the weekly chart so far, the market is setting itself up for a rally alert buy signal going into next week. So far, we still got to get through tomorrow, but something else has occurred. It looks like the market may be getting ready to put in a leg lower and switch from a bullish bias to a bearish one. Now, we just came out of a corrective state, but there was really no correction. You just had a little minor pullback and didn't even really come down to test the trend line like you did back here and back here and back here, which were, giving you buy signals. So this is starting to show signs of breaking down, signs of weakness in Bank of America, representing the banking sector. Now, you may say, well, that's just one bank. Yeah, but it's like one of the largest banks in the country. So you can't just dismiss what is happening with that one bank. As far as the real estate market, we've been watching that. Here is IYR. This is the weekly chart. You can see you're accelerating to the downside as well, breaking below the trend line support. All right, the trend line support didn't hold. Back here, the test it did okay. Back here, it did okay. Bounced. You can see where excuse me, where it hasn't come down since it broke out. It hasn't come back down until now. So if we close below here, that's not a good sign. You're already in a correction anyway. All right, you're in a correction position with downside, with increasing downside production, getting close to entering into the Kumo cloud, and you're now officially in the red zone. So something needs to happen, or we are now seeing the cracks in the dam of the real estate market, ladies and gentlemen. You've been hearing them talk about and complain about the supply chain issues. Well, taking a look at the semiconductor index, the ticker is SMH, one of the most widely held ETF traded in the world. You can see here that we began the bear market descent the week of November the 26th of 2021, actually. Excuse me. And it just took a while as the market consolidated, but then it got going, and it's been downside production ever since, dropping below trend line support. And now you're now officially in the red zone. You're officially in the bear market. You were in a correction, and the correction has now begun, and it got pretty deep, taking you below the trend line. So we can safely say, as of right now, that we got a short-term top in on the semiconductors. So this doesn't look good for the foreseeable future, because you now have a break in the market. You got technical damage that has occurred on the chart. Something to think about moving forward. So I don't think we're going to see any PlayStation 5s for the foreseeable future. That's why they started making more PlayStation 4s, because it's easier to make PlayStation 5s. You don't need the complicated super duper chips to make those, but you do need it for the 5. All right, moving right along here, let's take a look at what the gold miners are doing. All right, so for the most part, you're consolidated, and you have been for quite some time. As you can see here, for the past couple of months, you've just been moving sideways. But something happened this week, which is starting to break down below where it was previously. And the reason for that is you had a bearish pointer on the week of December the 17th. And as I've taught you here, bearish pointers get tested and taken out eventually. That is what has happened so far this week. We have taken out the bearish pointer from the week of December the 17th and accelerating now to the downside. You're in a well-matured bear market in the gold miners, and it hasn't turned around. It doesn't look to be turning around at any point, anytime in the future. There's a lot that could be said for that. Okay. We know that inflation is alive and well in food and energy. This could be playing into that. Not to mention, now the price of gold, we know it's been suppressed for the past, decade or so. But as far as the price currently, gold is under pressure, as we'll see in a moment. So that could be contributing to this. Okay. Also, the interest rate environment is very volatile. Even though the Fed hasn't acted as of yet, they've been threatening to act in the future, in the near future. Could they do it in between meetings like they did in 2000? Or could they wait until March to do it like they did in 2000? We'll see. We shall see. Moving ahead, taking a look now at gold. We're going to look at ticker GLD. This is the ticker for the gold ETF, one of the most widely held and traded ETFs in the world. You can see here that it has been consolidated big time. The consolidation bar is from the week of June the 18th of 2021. The market has been trading within that zone for a long time. As you can see, again, this is June the 18th of last year, that week. And now the market is just coming down after testing the higher end of the range, spending some time up there for 2 weeks straight, November the 12th, and then cracking and then just kind of like drifting sideways. Look at the trend line. The trend line is going from right to left. It's just sideways, flat lined. There's no commitment in this market one way or the other. It's just not there. But you are in a bear market. You are bearish on the weekly chart, even though prices are consolidating at this time. All right. You started it here the week of June the 4th of 2021, and the market has just been kind of holding, drifting sideways with the bearish bias. You get toward the higher end of the range of this bar, the bears come in, sell it, get back up, bears come back in, smack it back down again. So that's kind of where you've been hanging out in the gold. Now, you probably say, yeah, but silver's doing better. I think silver could be doing better. Well, here's SLV. It's the ticker for silver, the ETF SLV. You can see here on the weekly chart, the weekly zone that this market has been trading is under the bar, going all the way back to September the 25th of 2020. That's right, you heard right, 2020. Look at this. The price action has not budged since then. You're still trading in the bar of the week of September the 25th of 2020. It gave you roughly a $4 trading range, and that's what the price of silver's been doing, just sideways. Commodities historically, all right, historically have sideways patterns that can last 2 years or more, sometimes even 20 years in the super cycles. All right, just not moving or moving in a very narrow range. All right, so that's what you got. You got a $4 trading range in silver for the last 2 years. Nothing's happening at all. The bulls and bears have been duking it out. All right, and the bears finally got the advantage on the week of June the 4th of 2021, and they held that bias until the week of October the 1st. Then the bulls wrestled control and lost it on the week of November the 19th, and the bears took control of it. And then the bulls took it right back again on the week of December the 17th, and they've been holding on for dear life, as you can see. You popped up here, and now you're getting so far, depending on what happens tomorrow, but so far you're setting up for a crash alert sell signal going into next week. So basically, a bearish bias. Now you entered the red zone back here, and this was, like I said, the week of November the 19th. Now you have the bullish bias, but there's no trend. It's black. There's nothing there. You're trendless. you are consolidated. So you have a consolidated market right now with more of a bullish bias, but the market isn't going anywhere. Silver has had a hard time at the $23 handle. And as you can see, that's where the bears come in and slap it right down. Moving right along. Let's take a look now at bonds. As you know, we had the FOMC yesterday. On the weekly chart, here's how we're looking. So we came into this week with a rally alert signal. The market did come up just an inch before reverting, falling, putting in a bearish pointer so far, and now here we are. The market's trying to move, trying to uptick back up a little bit, but this is a consolidation. This market has gone nowhere. It's just trading within the body of the previous week's bar. So the bears still have this. All right. So the bulls were not able to get any upside production from this rally alert, which means that the market has not yet bottomed out, not until we start the rally. And right now, you know, the bears are keeping a lot of pressure on the bulls right now. That's why you have this consolidated form right here. Maybe we'll have a repeat of this. That's what's forming right here. These two bars right here where the market gave it, and then boom, there you go. The first bar was just a consolidated bar like this one, and then the market took off in week 3. So maybe that's what you have. Your initial 1 week, and then the next week's bar could be one of these bars right here. But then that would cause prices to bump their head at the bottom of the Kumo cloud, and that's around the 145-ish mark for ticker TLT in the long bond. So we'll see what happens. But right now, bond prices remain under pressure. Bears are still clearly in control of this market, which means that interest rates are under pressure to go higher, even though they're being artificially held down by the Fed. Taking a look over at energy. I'm gonna start with nat gas because now we are in the winter season, and you can see here the nat gas is the price is starting to go up here on this weekly chart. All right, the bulls gain control the week of December the 24th. So that Christmas holiday period. Then the cost exploded. You can see here the market rallied quite strong, and now you're flip-flopping. So you're still consolidating, but you have now a bullish bias into this market. Prices have managed to get above the Kumo cloud, and now so far we're also above the trend line resistance, which is now hopefully, if it can run up, will act as new support. And it's been pretty cold, so I can see the demand for the nat gas is definitely there. So we'll probably end up with a run like this for the winter. All right. And this is just the beginning stages of it, perhaps. So this is the nat gas. The ticker is UNG for those that want to get involved in nat gas. The ticker is UNG, and it's like the most widely traded nat gas ETF that there is. All right. Flipping over to crude oil, the ticker here is OIH. This ETF tracks the crude oil futures. So basically on this weekly chart, you're seeing a very, very long-term consolidated pattern going back months. All right, where the price has just been consolidating in a very wide trading range. All right, where on the bottom you're about $170. On the top you're around 230. All right, so that's quite a wide trading range, with the market's not really going anywhere, just flip-flopping between the bulls and the bears. Here you had the nice bear run downside production. Here you had a nice little technical bounce in the bull run upside production. Then you flip back down to the bears, and they had it all the way down to here. Then the bulls came in, took over. Then the bears, it's just going up, down, up, down, up, down. Now you're in that down phase right now. This is the bar for this week so far. So far, you are putting in an alert for a buy signal for a bullish bias going into next week. Now, this may be a short-term bottom coming in. The last time the market tried to do it, it fell the week of June the 25th. You got no upside production, and you flip-flopped on that following week, and then the market fell. That might happen again here. So I'm not putting too much stock in that. I know the crude oil hit the, getting flirting with that $90 handle. Maybe that'll help the OIH. I don't know. We'll see. But overall, you can see a great consolidation in OIH. All right. Another issue that we've had is the tech sector. It's been getting wrecked, right? Here's the Nasdaq 100. The ticker is QQQ. All right. It's the Nasdaq 100 ETF, the most traded Nasdaq 100 ETF that there is. And you can see here where the bears finally took over the market on November the 26th. So let's see. Yep, the week of November 26th. That's when the market switched from a bullish, bull market, long-term bull market, to the beginning of a bear market. So we got a short-term top, which may end up becoming the top in the QQQ and the Nasdaq 100. Looks like the top is in for now as you're accelerating to the downside. Not only did you get this initial crash alert sell signal, but then you got a secondary crash alert signal here, and then you got another one right here, and look at all this downside production. So this is what's happening right now in the market. Read it and weep, like they say. You have technical damage on the chart. You got you're in a full-blown correction mode, and you're accelerating to the downside. The fat lady's not singing yet because this week's bar is not completed until tomorrow. We'll see where the market closes. All right. As of right now, we don't have anything else to add to it until we see how the market what it does on Friday. On Take Back Friday, we could get a nice little technical bounce. Profit taking from this being short. Almost 4 weeks in a row. So we'll see what happens. All right. Last but not least, here's the S&P 500 for those that are like the S&P. The ticker is SPY. All right, and you can see here it started its descent the week of January the 7th of this year, and here you are in full-blown correction mode, downside production. Is the trend line going to act as a technical floor to bounce from and create a rally? Are we going to get a rally alert going into next week, or are we going to get more of the same? You are in the red zone officially, bear market, okay? Something to think about. All right, last but not least, our final chart of the evening. We saved the best for last, and that's Bitcoin. Now, I've been telling you about Bitcoin for quite some time, for years, here on YouTube. I always warn you, you ignore the indicators at your own risk, at your own peril, okay? Here's where you are, ladies and gentlemen. This was the old high. You came in, took out the old high, couldn't hold it, and collapsed. So you got the top is in for now. Short-term top is in Bitcoin. All right, your descent started in the week of November the 19th. You got that crash alert sell signal, and it's been down ever since. Now, here you took a break the week of December the 24th of 2021. It's the holiday. Market really didn't get anything going. Flip-flopped right back down again, and look at all this downside production. Not only are you below the trend line, you're also below the Kumo cloud. The market has fallen over the cliff, and the downside is accelerating. You're officially in a bear market. Here's your little bear. All right. He hasn't grown up to be a really big bear yet, but you are at the beginning stages of the bear market. Here you go. You are officially there. The bull market is over in Bitcoin for now, and it is what it is. All things being equal, I've warned before, Bitcoin can go extremely low. We don't know where the bottom's going to be this time. because there's no support for it. It's just wide open down here. All right, those old supports and resistance zones are becoming irrelevant pretty fast. We had the old zone of 30 to 35,000, right? That was our old resistance zone going way back. Then the market extended that to 50 to 55,000, and now look at us today. So definitely one of those situations where you got to follow the report on your dashboard, man. I can't stress that enough. Just follow the instructions on the dashboard. Do exactly, follow the system. Trade the trend of the market. You want to be on the right side of the market, so you're looking to trade the prevailing trend. Okay. When you get these red and green arrows, that's just alerting you, to what's going on, where the biases are flip-flopping at. All right. As you can see, these black bars means the bears have control of the market. The blue bars mean that the bulls are in control of the market. All right. So when you get a red arrow in a bear market, that's another sell signal letting you know the market's about to get loose. And that last signal we got here, the week of June the 18th last year, you saw the market just collapse, right? Then the bear was over. You got that official bull market. That you know that the market has turned, the trend has turned on the week of July the 23rd, and then the market roared right back up again. All right. You got this. You got this signal here that you know that the market may be running out of steam, and so it gave you that warning here. But then because you're in an uptrend, you got a buy signal here. If it canceled this one out, market came up, but then it came right back down again, and then gave you a bear market alert. Market did break down, as you can see, and then flip flop, and then you got that buy signal, and then the market. I mean, that's how Bitcoin is. It's a roller coaster market, and it is not for the faint of heart. All right, with that being said, man, that's all I got for this evening. You know what it is. Tomorrow's Take Back Friday. If markets have been down all week, you can expect a rally on profit taking and vice versa. It doesn't always end up that way. Sometimes you get that major continuation pattern, but it is what it is. So with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Have a great weekend. Be safe. We got another foot of snow warning coming to the DMV. So East Coast, we about to get hit again. Hopefully not. Hopefully, no, we won't lose power or internet, because that tends to happen around these parts. Stay safe, stay vigilant, and I'll see you guys in the trade room. I'm out. Peace.